And hello again, I'm Bob Schieffer, and this is Washington Unplugged. A report from the California Nurses Association says that 21% of insurance claims submitted in the state of California are denied by leading insurance providers. The report has prompted an investigation by California's Attorney General Jerry Brown. Healthcare for America Now, a liberal lobbyist group in Washington, has been using the report in a new ad. Take a look at this one.
How to Get Rich by America's health insurance companies. Raise health insurance premiums 4 times faster than wages. Pay your CEO $24 million a year. Deny payment for 1 out of every 5 treatments doctors prescribe.
Well, does that shocking statistic really mean that 1 in 5 of medically necessary treatments are denied to California residents? And what does this mean for the national debate on a government-run public option? Here to talk about this report is Donna Smith from the California Nurses Association and Robert Zirkelbach from America's Health Insurance Plans, which represents the providers. First of all, Donna, the Healthcare for America ad suggests 1 in 5 people are being turned down. Is that accurate? Does that mean that 1 person in 5 who needs medical treatment is not getting it?
It's a great question. It turns out these are numbers that came from the California Department of Managed Care, reported by the insurance companies themselves is where the numbers came from. So the lowest overall number was a 21% denial rate. And while we've heard some things from the insurance companies about that really represents a lot of other reasons for claims denial besides treatment denial, ultimately, we see millions of people in this country who are denied care and at the very best delayed care that they very much need.
Now, what we don't know is what this is nationally, because California is one of the only states that actually keeps up with this. Well, Robert, what about that number? 1 in 5? That sounds like a lot of people are not getting what they need.
Well, the Department of Managed Care has said that statistic is misleading and does not tell the whole story. A large percent of the number that we're talking about there are when claims are a duplicate claim, when it's sent twice to the insurance company, or when it's sent to the wrong insurance company. And California also has a unique capitation arrangement with their physicians, where the physicians pay the majority of the claims. Sometimes a claim would be sent to the insurance company when it should have gone to the physician. The claim denial is really just that claim being sent to the physician and is being paid. There's no beneficiary disruption. We actually do know what the average claim denial rate is across the country. According to the American Medical Association, it's between 3 and 4%, less than what Medicare denies for claims. Health insurance companies have a responsibility to our policyholders to make sure that we're being good stewards with their premium dollars, and that we're not paying twice for a claim, and that we're not paying for claims that were sent to the wrong insurance company.
Well, Donna, let me ask you, how can that be 3 or 4% and in the state of California, 21%?
Well, this is so interesting to us when we hear those descriptions about the denials and the explanations for that. At the very best, that represents a lot of administrative waste in the system. And one of the things we often talk about when we talk about reforming the system is the amount of waste. Up to 1/3 of the dollars spent on health care in this country, billions of dollars are spent on this kind of waste where paper is shuffled back and forth. And if you ask people who really were denied care and ultimately then that care and those claims were either approved or paid, there's some very serious consequences to those claims that are denied or delayed while that paperwork is shuffled back and forth.
Well, do you accept his number?
We don't accept that number because we don't have enough transparency in this situation yet. And we're currently being asked to reform a system in which every single American will be mandated, forced to buy private insurance, to purchase insurance, and the taxpayers of this country will pay subsidies for others to purchase private insurance. And it seems to us that the issue of transparency and record keeping should stretch across the nation so that we have full access to what exactly those denial rates are, all of the accurate definitions of why they're being denied, including those claims that ultimately patients end up responsible for, driving bankruptcy rates ever higher in this country.
So what about that, Rob?
We agree that we absolutely have to do more to simplify administration. One of the problems we have right now is that claims are not being submitted electronically. The systems that the providers and the health plans have aren't talking to each other. We don't have that streamlined communication where a claim can be submitted electronically and the payment sent back in timely fashion. So what we've been doing as an industry has been working hand in hand with the provider community to develop reforms. We proposed administrative simplification reforms to standardize how information is exchanged between health plans and providers that will help to reduce the duplication, to reduce the inefficiencies in the system, and ultimately free up time so that doctors can do what they should be doing, which is focusing on patient care. That's a top priority for us, but it needs to be a shared responsibility with the providers and the health plans working together, getting the technology in place and having the standards so that we're able to do that kind of communication.
Let me ask you this. Why is it that the figures vary so much from insurance company to insurance company? I'm just looking at some of them here. One company, Pacific Care, I guess that's United Healthcare, 39.6% or rejected. Can that be right?
Well, again, this goes back to those statistics I had mentioned at the beginning. If you actually look at what we're talking about, this isn't claims that weren't paid. Oftentimes, this is claims that were sent to the wrong entity. It was sent to the insurance company when it should have been paid by the physician's practice, and so that information is being funneled back, but it's still being paid, and there's no beneficiary disruption.
But it says here 39.6%, yet you go down to a company, Aetna, and it says only 6.4%. Does that mean they're just better bookkeepers over there? Or?
Well, a lot of it has to do with what are the networks in place. What kinds of communications? Is this an integrated delivery system versus, say, what you have with some of the different PPO arrangements? So a lot of it depends on what is your network of providers that you're contracting with? How is the information being exchanged? And what does the data really mean? Because the question here is, are patients getting the care they need? And if you look at the data and if you talk to patients, the vast majority of people are satisfied with their current coverage. The claims denial rate is very low. Over 97% of claims are paid. But we can do more to simplify administration.
Getting the care they need?
I think that's the bottom line that often gets forgotten in this is the fact that there are patients at the bottom of all this. You look in California alone, 3 very prominent cases. Natalie Sarkisian, young woman covered by Cigna, whose claim was denied, ultimately overturned only after huge protests in the streets and of great clamor. Natalie died because of the delay that happened in her care through Cigna. Ricky Colombo, a young man in California, also had a cancer and was denied the treatment that his physicians fought for. It took another huge protest by the Nurses Association and others in his community to gather energy to get that denial overturned. Ricky, too, ultimately died. Would those 2 people still be alive today? We don't know that. Just last week, a completely different insurance company, Blue Shield, denied a woman whose breast was bleeding, went to the emergency room in Daly City. Rosalinda Ramirez, her name, went to the emergency room. Her claim was denied because they didn't consider it an emergency. So we have patients at the bottom line here. We have patients who are delaying treatment and dying and ultimately becoming responsible for debts they should not have to pay.
Well, I'm sorry that's going to have to be the last word. The clock is run out on us, but obviously this is a debate and a subject that is to be continued and is far from resolved yet. Thanks to both of you.
Thank you.